What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on PLTR ticker. And in today's video, first of all, I will show you where we are on the price chart and how we get there. Then I will continue with the fundamental news that drives the price of this company south. And at the end of this video, I will share my thoughts and my technical analysis. And I will show you what should you expect next. So let's start with the price chart. I made my previous video right here at this very point where we had this price section around $22.75 and I've told you that it might be your next accumulation point because from this point we had decent possibility to move higher, but instead of this we had this sell-off. And I've told you that we have very good possibilities to hit even our lower target, and it is this support line at the price point of $20.58. And we are on the way to this level. And I have to say that we also might have the range of support right here at about $21. So from our current price, we have about 2% to first support and about 4% to our major support. So we are not so far from this level, and that's why you have to be cautious with this price action. So I will show you what should we expect next in my technical analysis, but for now let's continue with the fundamentals. First of all, let's take a look on their numbers. This company has a total market cap of $43.1 billion. They have a revenue of $1.43 billion with the revenue growth of 43.12%. So a lot of 43 numbers. Then they have a negative net income of $512.53 million and they have a very strong cash position of $2.53 billion. Again, 53. So let's continue. They have a total debt of $263.23 million. And from the financial standpoint, this company is quite stable. They have enough money to operate. They have very good revenue growth. That's why you can rely on this company as your potential long-term investment. So, and let me show you this article. It was published on November 19th and it's titled "Palantir Big Money is Flowing In." And let me quote you the summary. Institutional investors bought approximately 8.3% of Palantir's total shares outstanding in the last 13 F filings cycle. This is understandable since the company is well positioned for continued rapid growth and its shares are relatively undervalued. Readers and investors may want to view this heightened buying activity as a reassuring sign and remain invested in the name. So, and let me show you this information. We are in the list of their institutional investors and we have several new filings that was made on November 18th, and you have to keep in mind that these filings have a delay of at least 45 days. And if you divide the value of their position by number of shares, you will have an average price of their position of about $24 to $25. And for now, the price of this share is $21.41. And this means if you start to add your position right now, your average price will be much more attractive than the price of these investors. And let me show you this information. This is the list of institutional investors' activity, and as you can see, we have on November 29 the next cycle, and we have a huge increase in volume, in buying pressure, I have to say. And despite of this pressure, we have this massive sell-off, and in my opinion, it is nothing more but just a huge opportunity for you to invest in this company if you believe that this company will be successful. And let me show you this information. We are on CATHIE.com, and this website tracks the activity of ARK Invest funds, one of the most successful funds on the market. And let me show you this. These funds heavily buy the shares of Palantir during the recent sell-off. And as you can see, on November the 10th, they bought about 900,000 shares. Next fund bought at the same time 121,000 shares, 225,000 shares, and all of the different funds are heavily buying these stocks. And you have to rely on this opinion at least as a part of your due diligence. So, and let me show you this article. We are on motleyfool.com, and this article was published on November 19th, and it's titled Palantir stock, bull versus bear. And I don't want to dive deep into the bull case. I just want to pay your attention on a bear case, and I want to try to debate these facts. So, let me quote it for you. Potentially suffering from not focusing on one customer group, Palantir saw its third quarter government revenue increase 34% year-over-year, compared to a 66% second quarter year-over-year increase. Government contracts make up more than half of Palantir's total value. So, this slowdown is concerning. And still, its contracts tend to be lumpy, so this could be a false alarm. And I have to say that this statement is quite bullish, but right here, the increase of 34% might be for some analysts as a red flag. But think of it like this. All of these contracts are still growing, and you have to keep in mind that it is not a good sign when a lot of contracts and a lot of revenues for the company come from one huge customer, that is basically US government. And that's why the reduce of this growth, it is not actually a reducing of its growth, it is increasing of growth of commercial contracts. This means percentage-wise, it is not so impressive, but still 34% with the huge revenues is very good number. And that's why, in my opinion, it is not a bad sign for the company. Next one, the most concerning part for the majority of investors. While the business might be successful in some areas, being a shareholder may not bear the same fruit. Palantir compensates its employees heavily with stock. As a result, its share count has been rising. So, as you can see, the dilution of existing shareholders in Q3 2021 was 3.7%, in Q2 2021 was 4%, and in Q1 2021 was 3.3%. So, it's quite big numbers on the one hand, but on the other hand, let me show you this. This is the exact amounts of their stock-based compensations, and on Q1 2020 it was $54.1 million. Next, Q2 2020, $127.8 million. Next, Q3 2020, $846.9 million. The numbers are increasing, and the total amount of this stock-based compensation is more than $1 billion from Q1 to Q3 2020. And for now, let me show you this number. The total amount Q1, Q3 is only $611.3 million. About 50% reduction from this number. And it is a very good sign, because all of these numbers show us that they reduce this stock-based compensation. And with the increase in revenue, these numbers becoming less important. So, and that's why I think it is also not the real bad sign for the company for now. And let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, as I already mentioned, for now we have to keep an eye on the bigger picture, and if I switch to weekly time frame, let me show you that we don't need unnecessary tools, we don't need this channel anymore, because we broke it to the downside. We don't need this support / resistance. Probably I will draw it again in future, but for now we don't need it. And we just have this level as our major support that we shouldn't break. If we will break it without any bounce, we might see lower targets, and our next accumulation point, that was the perfect one right here at around $17, will be in play again. So, and let me show you on a 4 hours time frame, and let me show you indicators. And right here, as you can see, we have higher lows on our side with the lower lows on the price action. And this pattern is a bullish pattern, it is a bullish divergence. This means we might see at least a bounce to the upside in order to unload this massive sell-off. And to project the bounce, I can pull a Fibonacci retracement tool from this top to this bottom. And if we will bounce from this exact level, we will have our first price target at about $22.92 and the second one of $23.89. And if we will see a trend continuation, and if we will see higher lows and higher highs, this means at the retracement from this bounce, we will have more confirmation that we are about to start new uptrend. And from our current price, we might have about 7% to our first target and about 11% to our second target. And for those of you who want to invest in this company in the long term, I mean longer for 1 year, you can add your position no matter what on every daily red candle. So, I think from the technical standpoint that's it for now. If you like my video, please hit the like button and subscribe to my channel with notification bell. And see you guys and girls next time. Bye!